Hello, everyone. Welcome to our Carta virtual event on Tender Offers 101. Thank you so much for joining us today. My name is Peter Walker. I'm the head of insights here at Carta. And today I'm joined by two wonderful panelists who I will let introduce themselves. Cami, why don't you go ahead and kick us off?
Hi, everybody. Thanks, Peter. I'm Cameron Contizano. I'm a private equity M&A attorney at Goodwin Proctor in DC and do lots and lots of tender offers representing both companies and investors in those.
Wonderful. Thank you for being here. And James, how about you?
Thanks, Peter. My name is James. I work on our private capital markets team here at Carta, helping our corporate issuers structure and model their tender offers.
Fantastic. So, James, I wonder if you might kick off this event by giving us a little bit of the basics, the ground rules when it comes to what are tender offers, how do they work? I know you've got a bunch of information prepared on that.
Sure. Let's see what the slides pull up here. Perfect. All right, Carl, if you want to just go to the next slide. And one more. Great. So a tender offer is the most common solution for companies, private companies looking to provide liquidity to their employees, early investors, and other shareholders. Basically, a purchaser, either the company itself or a third-party investor, makes an offer to buy a set number of shares at a specific price per share, and then a group of shareholders are then invited to participate as sellers and are given 20 days to decide whether or not they want to tender their shares at that price. Mm-hmm. If you go to the next slide, Carly, perfect. So there are a few things to consider when planning out a tender offer, starting with what price to set the offer at. So some factors that will go into determining price include investor demand, if it's a third-party buyer, the price of the last primary round, depending on how long ago that round was, and the fair market value of the stock. Also, depending on how the rest of the transaction is structured, there are some 409A impacts to consider. A couple other things to think about are who's going to be buying in the transaction. So again, whether it's a company buyback or a third-party investor, and then who's going to be selling. So there are a few levers a company can pull when determining seller eligibility that we'll dive into in a bit more detail when we cover transaction modeling. But at a high level, a company will determine which share classes are going to be eligible. So, whether it's common and options, preferred, or some combination. And then they'll set up which holders are going to be eligible. So often starting with stakeholder relationship and giving each relationship a set percentage of their equity that they're able to transact. There are a couple of tax implications for the buyer and seller composition that could impact whether or not the transaction is treated as compensatory or capital gains tax. And we can touch on that a little bit later, Peter.
Wonderful. Yeah, James, thanks for the run through there. If we keep going through the deck, Carly, just like a bit of a high level context through our data on the kinds of companies that we're seeing run tender offers, as well as the interest from employees and other participants in these offers as described by that median subscription rate. So I think there's a common perception that tender offers are exclusively utilized by the later part of the venture market, companies in Series D, Series E, etc. And that is definitely a broad portion of the companies that undergo or choose to transact a tender offer. But there's increasingly companies across the venture spectrum, even as early as Series A, that are considering a tender offer and indeed holding them. So you can look on that pie chart on the left of this page and see that there's a significant percentage of all of the tender offers that are run on Carta that are actually coming from early stage companies. And we saw that hold pretty true from 2022 into 2023 and indeed into the latter part of 2023 as well. So it's not just late stage companies. But when you look at the right-hand chart, which describes the median subscription rate for these tender offers, the subscription rate in this case is how likely, of the demand, or excuse me, of the supply that is offered for in each one of these events, how much of it is actually taken up. And you can see that at the early stages, subscription rates are very, very high. And then at the later stages, they come down, but they don't come down that much. It's still about 87, 86% of subscription rate, which is really, really good to see. The other point that I'll make is that oftentimes tender offers tend to follow a similar pattern at perhaps a little bit of a lag to the primary market. So as we see fundraising pick back up in 2024, it's fairly likely that we will see tender offers also pick back up in terms of activity and likelihood of actually transacting. So we expect that 2023, which was a down year across venture capital, will probably mark a low point for tender offers and secondaries generally, and that things will probably move back up into 2024. I forgot to mention at the top, if you have questions that you'd like us to answer during this event, thank you so much for those of you who pre-submitted questions. We had dozens that we were maybe not going to have all the time to get to. But if there's something that's really interesting to you about this presentation, please throw those questions into the Q&A, and we will try to get to those as well. All right, so that's the insights portion. James, I know we wanted to kind of give people a real live demo of what things look like inside Carta if they were to run a tender offer. So why don't we go ahead and jump into that?
Yeah, so we talked a little bit earlier about some of the high-level considerations for determining who can sell in your tender offer. Now we're going to show a quick demo of our recently launched report that helps you model out these scenarios and see how they impact total eligible equity in a transaction. All right, just going to give a quick demo of how to run the tender offer seller model report. So first, you log into Carta, come down to Run Reports on the left, open up the modeling folder and select Tender Offer Seller Model. The only input you need to run the report is an as of date, also known as a record date. This is just the date that we calculate any vested totals as of. So let's say we want to run this for the end of last month, move the date to February 29th and export to Excel. Once you open it up in Excel, you get dropped on an instructions page, which just gives a breakdown of the different tabs available and what customizations you can make in each one. But the main tab we focus on is the seller model, where you get to the top here, you'll see a summary statistics table, which breaks out the number of sellers, total number of shares, and total dollar amount eligible by relationship. For inputs, the first one you'll see is price per share. So anything with a gray background is an editable input. So if we move the price per share from $1 to $2.50, you'll see the max notional jump up here. As we keep going down, you can set a sell max percentage by relationship. This is further customizable on an individual basis, but a relationship level is just a good place to start. So for example, if you want to make officers ineligible, you would just give 0 sell max, and you'll see that change. Likewise, if you make employees go from 20% to 30%, you'll see the max shares eligible and max notional jump up. Then we do have a couple of custom buckets here. There's a group of stakeholders that are meant to be treated together in the transaction, but don't have a specific relationship type, or you don't want to change the relationship type in Carta. You can just use that here. So for example, if we say affiliates can sell 7.5%, then you just need to decide what total you apply that sell max to, whether it be just eligible securities only, total grant amount, or total vested securities across all share classes, regardless of what's eligible. So by default, we say we'll take the percentage of the eligible invested securities. Then you set which share classes are eligible. So for anything that is eligible, you mark true, and eligible false. So for example, here we say everything besides common and options are ineligible. So we'll mark all the preferred share classes false. You'll see a couple of folks that only own preferred equity become excluded. And then if we just look at the table based on a shareholder level basis, here everything in gray similarly can be changed. And if you make any changes in the stakeholder level configuration, it'll turn yellow, just to make it clear. So for example, if we know Emily, Tag, and Ann are the affiliates we talked about before, we can just make those changes. See how their sell max changes 7.5%. If we know specific people are meant to be excluded, you can make that change here and they will turn red. And then you can change that sell max like I mentioned before. If you know on an individual basis it's supposed to be 17.5%, you can make that change. You could also change the sell max by shares or by dollars, and it'll just divide that dollar amount by the price per share set earlier. We also have all or nothing functionality. As a cap table cleaning mechanism, you want to make sure that
a group of participants, if they sell, have to sell their entire position. You're able to do that right there. Then there's also sell minimum. So that's the main functionality. And like I said, in the instructions tab, you'll kind of have a full breakout of all the other different features that you can use here.
All right. I love that we have James on video explaining things from James. It's a good meta discussion point. I love
James
it.
on video went on mute there. I was going to confuse myself.
Exactly. Fantastic. So lots of questions in the chat already. Wonderful, wonderful Q&A upcoming. But I wanted to bring in Cammie's perspective here to start with to kick off this Q&A part. I think one of the main pre-submitted questions that we got was, what is the difference between a secondary transaction and a tender offer, and maybe some pros and cons of doing one or the other? So Cammie, I wondered if you wanted to touch on that one first.